Nilesh Shah is a market master today. He's managing director at Kotak Mahindra Asset Management Company. He's with us here in our studios. Nilesh, great to have you with us here. Thank you very much. And looking at you in all your finery, we are feeling serious FOMO.
I definitely am. I'm like, if Nilesh was coming dressed up for Diwali, I should have done the same.
If you had known, 100%. So, but thank you very much for dropping by.
I'm trying to represent the festival season in the market.
Very much needed, and absolutely. Nilesh, how is the market looking? I mean, how's the earnings season been? I put out a piece on Friday which kind of showed that out of the top 200 companies, about 60% of companies actually have seen some downgrades. Nothing large or major, but it's not. It should be the other way around. 60% should see upgrades, but that's not happening as yet. Go on.
So Indian market is not like Australian cricket team yesterday when they were down 7 wickets and we need Glenn Maxwell to pull a miracle. We are like our Indian cricket team. We were winning 8-0. Now, what more you can deliver on those expectations? And which is why some marginal adjustments are happening. But frankly speaking, today when we go and meet corporates, small, medium, large, everyone is looking at future with a lot of positivity. Their leverage is low, their turnover is up, the capacity utilization is 75% plus. Everyone is now looking to invest, looking to expand capacity. Frankly speaking, we are living in an era where experience is becoming a liability. We have been hit in the market so many times that you don't want to accept all the good things at face value. And your suspicious nature is pulling you to figure out what is wrong. But actually, it's just working out so nicely.
Okay. Nilesh, first of all, happy Diwali to you, and hope this is another prosperous year for you, your team, your family and everyone involved. More important is health, right? Prosperity health-wise, more than wealth. But I wanted to ask you a little bit about how retail investors should approach the year to come, because there are some headwinds on the horizon, whether you talk about geopolitical issues, whether you talk about what's happening across the globe. Do you think any of that would get to our market or not? You think it's going to be a pretty smooth run from here on?
So you should never say never. But our biggest bugbear was oil. And with geopolitical tension in Middle East, it was expected that it will go into triple digits. Today it is down to around 80s, 85s. I mean, who would have expected that US will lift sanctions on Venezuela? Venezuela has more oil reserve than Saudi, and they are producing probably 5 to 7% of Saudi's oil production. Now, it makes sense for Saudi to keep oil prices under control rather than run away. Straightway, India benefits. So I'm seeing this kind of interventions happening, which is removing our challenges. Some time back, we were worried about monsoon because August was dry. In September, rains recovered. Now, it hasn't reached to above average, but from deficiency of double digit, we are in mid-single digit deficiency. So in the market, you should never say never. But truly right now, large caps are at historical valuations. Small caps are at 20% premium. So bearing valuation concern, which one can debate about, I think on growth there is consensus, on corporate health there is consensus. So my recommendation to retail investor, just stay invested. And if at all there is a correction for some unknown event, grab it as an opportunity to build your equity portfolio.
Well, hi Nilesh, good to have you in the studio. And I always tell you I'm following that policy.
SIP.
SIP, I'm keeping it going. And
so, Nigel, now there is one beautiful definition of SIP. Sab Ichcha ki Poorthy.
Amazing.
Did you come up with that?
No. It's all WhatsApp gyan.
I think Nilesh, you should put the SIP campaign, the AMC campaign. I think it'll fit nicely.
Lovely. But we are keeping the faith and we're going according to that advice as well. But talking about markets, things are looking good. And as you just mentioned, from the broader markets, maybe the premium has gone up a little bit in comparison to the large cap names. So incremental money, where does it go? Would you put it more towards the large cap names? Because they have actually underperformed in this year so far.
So undoubtedly, there are many underperformers like large caps, private sector banks. But that is why they have become cheaper. In large cap companies, earnings growth momentum has not slowed down.
Right.
In private banking, earnings growth has been fairly good. So we believe right now it is time to focus on valuation. And if you buy below average valuations, the chances of you making money will be far better. Undoubtedly, small and mid caps have done exceptionally well, and many of those companies have delivered also good results. But at this valuation, probably they will need to halt a little bit so that there is a time correction when earnings catch up with the fundamentals. So we are relatively choosy about valuation, trying to invest into, let's say, the bottom half of valuations rather than top half.
Which would get you to, I mean, if you were to kind of dissect that, not via large caps, mid caps, but sectorally, it'll get you to a lot of consumer names in that sense, right?
Absolutely.
Not staples, but there are lots of other
consumer
names. Consumer
durables.
Yeah, beaten down, bombed out. Is there a place to look for opportunities? Are you seeing things happening there?
So normally we have seen ahead of election, governments puts money in the pockets of consumers. And there is a higher velocity of money due to spending. Now that should generally go to the bottom of pyramid, and they should be looking to spend money rather than save, unlike top of the pyramid. So both consumer staple and durable should have a better volume as well as margin growth in the run up to the elections and after that. And consumer durables have bombed out. They haven't really had a good run for some time. This festival season, there are green shoots visible. In fact, today's headline also talks about green shoots being visible. So our feeling is that it is time to accumulate consumer durable and select consumer staple and play for the election cycle.
Just to extend that point one step further, when you said you meet corporates and industry, they're all very optimistic about the future. But you hear this this feeling that the bottom of the pyramid is still, I mean, it's been actually down and out for a while now. Actually never really recovered in a big way post-COVID. So is that, how does that kind of fit in broadly?
So undoubtedly, Prashant, the bottom half of pyramid consumption is stayed, and that's reflected into mass market brands not doing as well as premium brand doing well. We believe this softness has continued for almost 18 months, and now hopefully there should be a bottom. Please be aware that we have been wrong for last 12 months expecting a bottom. The bottom has not yet happened. But we believe this festival season, things could change. The early signs of sellings by e-commerce companies, selling by reduction in discount or full price merchandise getting sold, all are giving hope that this time, hopefully, bottom of the pyramid will participate in festival season as much as the top of the pyramid.
Okay. You know, this earnings season has been interesting, right? It's been a mixed bag, but largely a lot of the nifty heavyweights have done well, whether you look at SBI, L&T, Titan, Bajaj Auto, Maruti, across sectors. What has your preferred space been post-earnings, where you think there is both valuation and growth headroom?
So banking and financial services continue to remain the preferred bet. Their earnings momentum is positive. Of course, it will slow down in the days to come, but valuations have corrected quite sharply. The second broad theme which we have been looking at is capital goods. In the past, capital goods were sustained by the government infrastructure spending. Now we believe it is government plus PSUs plus private sector which will all come together. Now, some investments may get deferred after election, some may happen before election, but we see there is a big runway for capital expenditure to grow, and that should support capital goods company. One cherry on the cake is that many of these capital good companies are also becoming part of the global supply chain management through their parents or otherwise tie-ups. So they will cater to local market as well as global market. So between banking and capital goods, I think we are finding a lot of opportunities.
Banking and capital goods. One more sector I wanted to discuss with you was EVs, because you know, now with so much pollution, I mean, people are really taking concrete steps in sustainable energy, or whether it's renewable energy or even electric vehicles, right? For that matter, people are sitting up and taking notice that, listen, it's affecting you and your health now, so let's take some steps. A lot of companies have been early adopters in this electrification space. Do you continue to bet on them, the likes of Tata Motors, etc., or do you now move outside the index as well?
So within the automobile sector, first is mass market versus premium. If you are at entry level car, you will sell for 5 lakh rupee and make 50,000. But if you are in SUV, you will sell for 25 lakh and make 2.5 lakh rupee. So premium brand over mass market is preferred. The second is that the future is EV stroke hybrid stroke hydrogen or maybe some other technology which we don't know about. Now, every company is trying to move into that space, and we'll have to really bet upon those companies which are going to be ahead of their peers. In two-wheeler electrics, we have seen some successes, many failures. In automobile, we are seeing different route being taken by different companies. Some are focusing on hybrid, some are focusing on EV, and who knows, someone may focus on hydrogen. So we'll have to really see how these technologies evolve. Today, jury is not yet out on whether EV is environmental friendly or not, because if your power is going to come from thermal side, you will shift pollution from cities to villages or to the coal mines. So we'll have to really see which company goes and invest into futures. In a very crude language, बचपन में जब हम लोग जाते थे एसटी स्टैंड के ऊपर तो हम रुमाल रखते थे कि जो बस जाएगी वहाँ पे बैठ जाएंगे. As a fund manager, we are also replicating the same. रुमाल रख रहे हैं. Depending upon how those companies actually perform in the future, will be increasing our positions.
Okay. All right, Nilesh, always good hearing your thoughts. Thanks so much for coming down. And since we started off with cricket, I'm only worried that yesterday Australia made such a good comeback. I hope they don't get that momentum going for them. But do you think this cup is ours?
So, undoubtedly it is ours. Glenn Maxwell inning was fantastic, no doubt about it. But I just hope and pray it doesn't become like Kapil Dev's inning for Australia.
Yeah. Indeed, fire up the
one inning, now you have done, you should rest.
Good his innings was with Afghanistan, right?
Absolutely. Now we should rest.
Thanks, Nilesh. So hopefully the next time we chat, maybe the markets trend higher beyond the 20,000 odd mark, and India as well will be lifting the cup and we'll be saying Chakte India. Thanks.
Amen.
All right.
Thanks very
so
much, Nilesh. Thank you.